On to gold, 14th of May. Recent price action has been quite interesting, to be honest. So let's just get into the higher time frames beforehand. Gold on the monthly, let's have a look at the month first. Now, monthly gold, last month we did look at the closure of last month. Bang, spike back up. Culprit, I would say 1270. 1270 because we spiked into it once more this month and we are actually in the green. Going into the week, back onto 1270 as you can see there. Boom, boom, boom. Spike to the downside, managed to actually hold that as support, roll back up, and now we're actually breaking out. I'll be very, very careful on gold right now because we could see some volatile price action. We had some news out this week as well on the US dollar. But what I'm trying to get across here is that we've broken the ascending zone. Okay, we spiked into the zone right there, came back down, broke it finally. It's very, very hard to tell at the moment as to where this is going. If I put my crosshair at the bodies of these daily candles, that's 1307. We could maybe run into that. That's the next point of call. But at the moment, we're actually holding up relatively well, but we are right on 1300. 1300 is serving as a very, very strong psychological level at the moment for gold. So how would I handle this? Well, I will keep an eye on the 1300. I'll keep an eye on this zone right here. That's the more or less a region 1307's there. 1307 to 1310. I'll keep an eye on that region as well. This 4-hour level I took from the two bodies there and brought across. We reacted to that, pulled back down, but we were making discrete little higher lows, if you will, before the market actually broke out of that region. That's a nice push through the 4-hourly zone right there. And then market actually continued to the upside. So where next? We can actually pull back and reverse. I'm not going to, if you look at the weekly candle, look at the weekly is quite strong for now, but look at this, look what happened previously. This tells us there's liquidity in this region right here, so we can just be filling that and we can stomp back to the downside. Yesterday's daily candle, yes, it was very, very strong. In comparison to the volume on the previous 2 weeks, which tells us a lot. But I wouldn't be fooled just yet, and I still wouldn't really be fooled just by the break of this area because gold has been swinging to the downside. It could surprise us and come through with a bit of a hectic drop. I'm going to keep that on there just in case we do drive into this zone as a retest before actually going higher. Coming into the hourly time frame, what I'm looking at here on gold, the way in which I would mark this up, I would grab my rectangle tool, I'll bring the area right across on the wick because what can happen now is gold can drive into that and then find liquidity to push the commodity back to the downside. Longs, I would not be interested in longs just because of my bias on this has been short for some time. And also my experience on gold this time of the year too, coming into spring, summer, we can often experience some bearish momentum. If you've ever heard of the term sell in May and go away, referring to some of the major currency pairs with some dollar strength in the mix to actually push those pairs lower, i.e. Euro USD, Aussie USD and so forth. So I'll just take that into consideration. That here we could just be in for another fill of 1300 to 1303 before actually pushing lower. What I would do, I'd wait for the spike to come into that region and I would go in and look at potentials for rejection, and I'll sell into the rejection. Stops would have to be just above this area, but we're looking at targets into 1286, 1284, and maybe even back lower, guys. So let's monitor this one for the rest of the week and see how we get on. Hey folks, so onto the gold chart. Let's see what actually happened on gold in the last 2 weeks or so, and let's track into and as to where the price can actually go next and why. So we can clearly see on this weekly chart, it's really simplifying the charts now going forward. We have had spike to the high, spike to the high, spike to the high here. Last week we reached into 1300, which is very important. So we have the 1300 level right there. And this also states a weekly lower swing high point 1, 2, right there. What also is important is that if we look at the daily, we've had this range drawn on for quite some time, as you guys can remember. I've simply gone ahead and stretched it all the way across. We can see break, boom, tap, above, and then we're back in the range now. So we've gone from ranging into the highs. I'll cover this in a moment on the lower time frames, and then we've come back into the lows. But I need to just go back to the weekly for a second to just reiterate a few important points which we need to take on board. So we have that daily range, and look how the price has respected it because we've drawn it on correctly. We know exactly what is happening at that range. Now, we've come into the lows, we've come back up to the highs. Look at the body. Look at all of these bodies. If I put my crosshair just here where all of the bodies are at 1285.8, we can see that we've had spikes above 1, 2, 3, 4, but all of the bodies have remained slightly below. So the momentum could not sustain above, let's say, the higher end of the range, which was 1286.3. We had a few attempts to spike above, but we actually closed back below. So last week, we had the closure back below the entire region right here at around 1277, and we're looking now to get follow through. The gold weekly chart is actually explaining to us that we have had multiple attempts to throw into the highs. The wicks are being thrown up. Go into the daily. All that can really happen now is I would say there's a high probability chance that a breakout to the downside is imminent. Now, look at the downside level, the downside range, taken from the liquidity at the top of this wick here. So I'll put that right on there. And again, it's something that works extremely well on the cryptocurrency market, especially BTC, is when we see the forceful price action spike above and then close below. We can see that we've had tap. Yesterday's closure of the candle wasn't too good. It wasn't too strong. The momentum is definitely slowing down 1, 2, and 3 right here. However, we are looking to continue to the downside. Now, daily, we had the spike into 1300. If I place my cursor at 1300, you can clearly see where the green candle rushed and forced its way into the psychological level. The next day open, we spiked above. The next day open, we spiked right to it. And then we started to have the decline afterwards. This is also classed as a 3-pin pattern, 1, 2, and 3. At the psychological level of resistance, 2 nice confluences, also a lower swing high, bringing the price back down and below. The price would have to jump back above, I would say, a breakout, a retest, and then a continuation could allow the gold price to actually reverse. But the pressure is on from last week, the weekly closure. I am expecting a rollover and a break to the downside. If I just go ahead and 1 second, bang, if I just leave that there. Now, let's go into the 4 hour, let's go a little bit deeper. So 4 hourly, what we did see, a lot of mess, a lot of confusion. We've seen these boom, 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 miniature step-ups. Right there. Bringing this, sorry, it's locked. Bringing that across, lock that. So we had a boost all the way into the highs. Now I know what we should have been looking for here on the intraday and intra-week timeframes is looking at the last swing point. As long as we were below this last swing point, every area in here and every reversal would be a catalyst for a short. The catalyst for a short came at 1300, and that's why I've been reiterating from the start. Let's always program ourselves to view and hunt out the psychological levels beforehand. So we came into the psychological level, we rolled around. If we look at the setup that I did actually highlight, I believe it might have been the 4 hour and the hourly last time on gold. On the last video, you can go back and look. Here we go. I had that area. So it made the highs around 1300. I've taken the body up to the top of the wick. I brought that across. What we did see is we didn't have a perfect retest, but however, after that high had been made, all we had to do then was wait for price to display key intraday or intra-week reversals below that zone in order to actually say, okay, cool, the market has lost its momentum to the upside off this one push. It came up to find orders around 1300, and then the market has then sunk. And again, that's something that I did mark out on the last video. So chasing that up, we did see that actually come through. What is also great here is we can also go in with the rectangle and look at where the other spikes have been for simple areas of support. So we did actually consolidate for a while before that. We have the confidence at 1300, 1395 as well right here. The other psychological level taken from the wick across. So we consolidated for a while, but the secret, wick to the high, wick to the high, wick to the high, wick to the high. We have the breakout, boom, nice short there as well. But again, it comes with experience. Perfection in the market is very, very difficult to actually push down. If you're always looking for perfection, we're going to lose out, because sometimes we have to use our experience and our gut feeling to utilize our entries on a more discretionary sense to actually go into the market. So entries could have been seen here and spotted here, stops above the high, or conservative, wait for the break. However, the risk reward isn't going to be too good. If you were going to enter on the break, we look at the last spike. We place our stop loss 3 to 5 pips above. So now what we're looking at on the 4 hourly is where is momentum going on gold? Let me just zoom out. Where is momentum going on gold? So momentum on gold, if we look here, we have a simple area where we can go ahead and place that. We have spikes at a high still. We broke below, and now we're playing around at this level. We are going to probably dump into the regions of 1260 and then beyond. So we more or less need to take out these levels, guys. So I hope that was a good wrap up on gold. Let's see where this does go now. Taken from the weekly, daily, 4 hourly, and utilizing the 4 hour with the hour. Hey everybody, on to gold. Very interesting price action actually. Last video, as you can remember, I was expecting short. Now what we've seen was various tests around 1275. 1275, nice psychological level here on gold. If you look at the crosshair going across, you can actually see multiple rejections, and the momentum couldn't hold for too long below that level. So if you go across, you can see here, pinpoint, dip below, dip below, dip below. Market pull back above our region, our zone right there. As you can see, we respected that for a while. Boom, close above. First close above in a while, apart from none of these actually closed above these candlesticks, only this boost into 1300, and then we whipped back down. So we were more or less consolidating for a while, but we did find the bottom and the base, lower high, lower high, lower high. As you can see there, market pulled back to the upside, and then a forceful boost of momentum came into this market. Also, looking at the daily scope, we pushed right through 1310. The market fulfilled a lot of liquidity as it tapped into this region and that level, and then boom, forcefully pushed its way into the 1320 zone. As you can see as well, if we focus on the fine detailing on the daily chart right here, we came into that zone and we pulled back at 1325. 1, 2, went above that, huge spike to the upside. But look at how the market, now this is again going back to the importance, what can really assist you with firstly locking down your technical analysis and your trading is the zones in which we're focusing on in the market to give us that chart hygiene and that absolute clarity to make our trading judgments and our decisions going forward. Above that, we can see this region as well, right into a similar scenario to GA. If I just go back to GA chart, look what happened. The market made its new high, past the zone, past the region, and then dropped. If we look at gold right now, the market has done exactly the same thing. This is why we have to be vigilant and make sure our chart work is extremely clean. Came in, spiked above, look at the body. We more or less spiked through. We respected this region heavily. Heavily respected here, heavily respected here. Market turned around, rolled back to the downside, and as you can see, it's more or less kissing our zone, but also our horizontal ray. And again, guys, you should know now how and why the market is reacting to certain levels and regions. From here, what can happen? Now, this area, if we look at the weekly on gold, look at the weekly time frames, we had a lot of signaling down here. If I put the crosshair at 1275, you can see that not one of these weekly candles, look at all of the wicks, 1, 2, 3, 4, 5, 6, right at 1275. No body could actually close below that. So from this consolidation, where again, look at all of these bodies here, and then boom, we have the boost, the momentum. After this weekly candlestick, the momentum was back to the upside, and that could have given you the heads up. 1 week straight into that zone. We stayed below 1350. Just knowing about the psychological level of 1350, which I've been explaining on gold and how to track that, again, that can give further confidence in actually taking better trades and signaling a potential reversal here. So what's actually happened is the market has rolled off and back below, and what I'm looking for now is the market to continue back to the downside. I'm looking for a rollover on gold. I do believe that we can maybe consolidate above this zone, but once this area has been taken out, important key here, look at this, boom, that's what I'm trying to express. We may see 1 or 2 days of price fluttering around before the momentum is taken out. As you can see over here, this red candlestick, look at the previous wick 1, wick 2, wick 3, wick 4. It has been dragged back down. Market came back in to retest that level before selling off. So what we can maybe expect is consolidation here. But when the market has broken through the level, it's now picking up the orders, especially from 13.25, sorry, and then we can actually say, okay, there's target 1, target 2, and then back into the lows on gold. So it's quite straightforward. So now overall targets on gold, here we're looking at 13.10, so that is, as you can see, we're at 13.28, 180 pips away, and then from the break of that area we can come into the 12.84, 12.85 zone. So it's going to be interesting to see how this one plays out. I hope you enjoyed the gold tracking so far. The market conditions have been relatively decent. We are coming into the summer period as well now. But yeah, that's my thesis on gold. I hope you've learned a lot from what I've gone through so far, and then we can keep our chart work simple and precise. Just going into the 4-hourly though, over here there's entries at the top after this wick to the upside. Boom, enter 3 to 5 pip stops above, looking for the rollover because we know this area has now been fulfilled, especially 13.45 right there, below 13.50. Rollover straight back to the region, so we can consolidate, maybe pull back a little bit to 13.30 before we actually roll into lower territory, and there's your 13.10 right there.